How goes it? I'm Ken Bozak from Pure Blockchain Wealth, where we talk about putting your wealth on the blockchain. This is the Bitcoin Domination Show, and today's guest is a Bitcoin expert who started speaking publicly about Bitcoin as early as 25 cents. He is a well-known and highly respected figurehead in the cryptocurrency industry, and host of the very popular Bitcoin Knowledge podcast, the one, the only, Trace Mayer. Thank you for joining us today, Trace Mayer. How goes it?
Oh, it goes well. Thanks so much for having me. Glad to be here.
Glad to have you. So I saw recently you said that Bitcoin could become significantly overvalued this year, up to $115,000. What makes you say that?
Well, one, nothing makes me do anything these days. I suppose that's a function of having very secure monetary sovereignty, and that's really what Bitcoin's about, right? We have this digital gold use case, this monetary sovereignty. We've got 7 network effects all taking place. Speculation is the first one, and just with the tip of the root in terms of speculation, we saw $17,000 in December. Well, I've done lots of interviews over the years, and the host of the Investors podcast, Preston, he pulled out something that I use a lot in trying to value different assets. It really applies to every asset, in my opinion. But I was talking about it in Bitcoin in this context, and he named it the MAYER multiple. And so he even made a website, mayermultiple.com, and there's a Twitter account, like all of this unbeknownst to me, right? And the general thesis of this MAYER multiple would be you take the current price and you divide it by the 200-day moving average. And what this does is it filters out all the daily noise, and it gives you a relative price. And then you look at that relative price over the history of the asset, and you can see, based on how many standard deviations away from the mean it gets, whether it's overvalued or undervalued. And so what we saw, like in 2011 or 2013 when Bitcoin ran up to its very high peaks, is that multiple got out to like 12.8x or 8x the 200-day moving average. And then, it would crash and consolidate and correct over a period of months or sometimes years. And then it would get down. And when it was really cheap, you could buy Bitcoin at like 0.9x the 200-day moving average. And in fact, if you bought at any time around like 1.1 or 1.2x the 200-day moving average, then it was considered a good deal. Like he went back and back tested a bunch of data. Well, right now, we have the 200-day moving average, and the current price is around $10,300. So that gives us a relative price, or this MAYER multiple, of 1.3x. And this is actually below the mean. It's usually this ratio is usually higher, something like 60% of the time. And so really, like in my opinion, when you're looking at allocating assets and everything like that, you want to acquire assets when they're undervalued, and you want to divest or reallocate into undervalued assets when you've got assets that are overvalued, right? And so like in December, when Bitcoin ran to $17,000, the MAYER multiple got all the way up to about 3.8x, which I'd put a tweet out in, I think it was October, about a potential $27,000 price in February, and that used a MAYER multiple in that calculation of like 4.75x. And so anytime the price gets very overstretched on that 200-day moving average, anytime that relative price or that MAYER multiple gets really high, it's not necessarily, the statistics are not in your favor for having a good entry or a good entry point into Bitcoin. And so when we look at 2018, we could continue having a correction and this consolidation, and we might even have this consolidation for another two or 3 months. And then if we have another bull run that starts up and people decide they want to start buying Bitcoin again, and then we could have a 200-day moving average that's up to like $15,000, and then we could have another bull run, and that could go to like 4x the 200-day moving average, and the 200-day moving average would rise also during that time, and so that could give us a significantly overvalued price of $115,000. Do you follow?
Yeah. So speaking of the price being affected, what do you think the effects of the futures contracts could have on Bitcoin's price long term and short term?
Well, that's an excellent question, and probably one of the multi-billion-dollar questions when it comes to analyzing this niche. So when we're looking at those 7 network effects, we've got speculation, merchants, consumers, miners, developers, financialization, and I would put those CME futures and ETFs into that 6th network effect of financialization, and then world reserve currency. Now, the network effects will interact and exponentially reinforce each other. So what we're seeing right now is the Lightning Network, which is a layer 2 on top of Bitcoin, which would give us scalability. We could do millions of transactions easily, cheaply, very fast, trustlessly. So that would enable merchants and consumers, those second and third network effects like Amazon or Walmart, big merchants and consumers, to come in and use Bitcoin. Well, what those big retailers would want to do is they would want to hedge their exchange rate risk. Well, they can do that with the CME futures. But if we're getting actual use case with the second and third network effects, which raises the price, because Bitcoin is a Giffen good or a Veblen good, actually it's both. And what that means in economics when you have a Giffen or a Veblen good is that as the price goes up, it actually increases demand. Basically, everybody loves to chase the rabbit, right? Mm-hmm. It's like, oh, the price is going up. You get fear of missing out. And so that it reinforces the first network effect of speculation. And so what I'm seeing is this correction consolidation right now actually feels a lot like the correction in February of 2013. And so I was on Future Money Trends with Daniel Amaduri, who's I think related to this show, and we were talking about Bitcoin, and it was like $7 or something, and it ran within 2 months to $266. Wow. And then it crashed and consolidated back to like $100 or something, and then it consolidated for 6 months, and then it ran at the end of 2013 all the way to like $1,300 from like a low of $60, but mainly kind of a low of $100. And what we saw when it ran to that $266 is the one exchange, Mt. Gox, was totally overloaded. I mean, you had customer backlogs of like tens of thousands of people trying to create accounts, and they couldn't create accounts, and like it really overloaded the infrastructure in the Bitcoin industry, exchanges, merchant processors, wallets, websites, news sites, like everybody who was doing stuff was just overloaded with customer demand. Well, and so, it crashed, consolidated, and then it had another run that was even, 6 times higher price than that previous run. Well, in this case, we had segregated witness get activated in August of 2017, and that has enabled a whole new batch of technology to be built on top of Bitcoin, things like Lightning Network in a much easier way. Well, we also had the price run. The price has run from like almost $1,000 to $17,000 in 2017. So we had this huge price run, and we had tons of new people coming into this space, tons of new people who are downloading their first wallets, buying their first Bitcoins, getting comfortable with the technology, opening accounts at exchanges, all this stuff. And we now have over 150 plus exchanges that do over $1 billion of volume on a regular basis. Because a lot of volume happens on OTC, so you don't even necessarily see it on the exchanges, or it's happening in altcoins or stuff like this. Mm-hmm. And so just to throw some figures out, we had Coinbase was adding like 200,000 new accounts per day. Bitstamp was adding 100,000 new accounts per day. The company I invested in, Kraken, which is the largest Euro Bitcoin exchange, they're adding like 50,000 new accounts per day, and they have something like 88,000 new accounts that are currently in the backlog waiting to get verification done. And this isn't only at the retail level. On Wall Street, there's a mountain of money trying to get their hedge funds approved with the banks and everything so that they can trade these CME futures. Because that's your question, right? Like, when can Wall Street move into this space with this mountain of money that they want to invest into it? And these CME futures, they only got approved and launched in December of 2017. So, they're getting comfortable with how those are working. Some of the banks have flat out refused to even allow these things to trade. We've had lots of resistance from the financial industry. Like the CEO of Interactive Brokers said it could pose systemic risk to the financial system to have these CME futures. And so everybody's getting kind of used to these things trading, and they've now been trading for a month, and it's been fine, and we haven't blown up the world financial system yet. But what's also happening is the hedge funds are getting approved to be able to move money into the space. And a lot of people also aren't necessarily aware, if a hedge fund wants to buy assets from what I understand, there's a regulation that caps the amount of assets that they can hold. And so if they want to hold more than $150 million of assets, they have to hold those with a licensed, registered, regulated custodian. Well, guess what? There isn't one of those for them to use in the Bitcoin space. And so that's what these CME futures or the ETF would be for. And so, just kind of the long story short is, we've got all these network effects exponentially reinforcing each other. We've had fundamental innovation and extension at the protocol level of Bitcoin. The second layer is getting built out so we can move into the second and third network effects. The sixth network effect has been approved by the regulators, and there's a mountain of money waiting to move in, and nobody, like the infrastructure in the community, just can't really handle it. So there's massive backlogs for customer verifications and all of this stuff. Plus, the people who would actually be buying and securing and storing their coins and everything, they have to get the technological literacy to be able to feel comfortable to move large amounts of money into the space too. So I think that the first 6 months of 2018 could very well be a learning and growing period for a lot of people who haven't moved into crypto yet and are starting to move into crypto.
Yeah, I'm really excited for Coinbase custody. That way they're going to be the institutional custodian for the traditional institutional investors for Bitcoin. So I am excited for something like that.
Yeah, I mean, like, whether it's that solution or there's goldmoney.com or like Kraken, we have stuff, and BitGo just announced that they bought Kingdom Trust, which is a licensed registered custodian in South Dakota and has $12.6 billion of assets. Wow. That they custodian, and they work with Bitcoin IRA and stuff. So I mean, like, it's all starting to filter up, but we're still very much in the early days with all of this. And so it's super exciting, because an individual can be very nimble, whereas these institutions are much larger and more clumsy. So the individuals, I think, are able to get into this a lot easier and quicker than this mountain of money that's kind of lining up and trying to get, it's trying to stick a size 40 foot in a size 5 shoe. It just doesn't fit unless you increase the size of that shoe.
Yeah, we're lucky to be individuals. We, like you said, we have that first mover advantage that we can take very, very easily as compared to somebody has to go through some, regulations and red tape. We talked a lot about getting money into crypto, but a lot of people have been, like myself, living off of it. I take money out quite a bit. So could taxes be the biggest hurdle in Bitcoin's path to mainstream adoption? How should Bitcoiners prepare for tax season? There is no H&R blockchain.
Yeah, right. And actually, one of my friends created a website, coinreporting.com, where it helps you it helps you figure out all your tax liability and stuff. And a bank actually shut down all his bank accounts and made him leave. And so he wasn't able to make enough money with the website, so he kind of shuttered it. So it is very difficult to find the tools that would make it easy to be, very tax compliant. And that's if you're trading between coins and if you're spending it and like all this stuff. In my personal situation, I am largely just a hodler. And as a hodler, I don't have any tax recognition events because I don't sell it. I don't spend it. There's kind of this there's this big kind of debate in the Bitcoin community about, we need to be spending Bitcoin on a regular basis and everything, and merchant adoption, and even at the expense of network security, kind of this Bitcoin 2x and SegWit 2x and like Bitcoin XT, like a lot of these fights about how the protocol should be extended. And I look at that and I'm like, I try to send the least number of Bitcoin transactions as possible, because one, I don't want to pay transaction fees if I don't have to, and two, I definitely don't want to have tax recognition events. And so if people are trading in and out of different cryptos and they're spending it at merchants and all this stuff, it creates a lot of reporting debt. It creates a lot of paperwork and accounting issues that if you want to be tax compliant, you're going to need to spend a lot of time in order to do that. And so I try to minimize the number of transactions I do, and then if I do transactions, they're usually in a large block. So I do like an OTC, and that'll get me dollars, and then I use the dollars to fund my lifestyle for that year or whatever. So. It's good to sell when the price gets gets very high relative to the 200-day moving average, because then you sell some Bitcoins at 17,000 and you've got Bitcoin spending money for the next 6 months or whatever, dollar spending money, and you only have one tax recognition event, because you've only done one sale. And so in terms of your tax liability and your record keeping liability, it's just a lot more simple to do stuff that way. So that's how I approach it personally. To each their own. But what I would not recommend, I wouldn't recommend thinking that you can use Bitcoin as this Switzerland safe haven bank account, tax haven place. If you're making significant amounts of money with Bitcoin, I think it would be a wise thing to pay your taxes. That way you don't get harassed by the tax man. But also, they have all types of ways to come and see, if they audit you, they might do a lifestyle audit, and it's like, how'd you get this Lamborghini, right? or they'll, so they look at the way that you're spending and all of this stuff. And also, a lot of the merchant processors and exchanges, they have to collect information and provide it to the IRS. So, if you go buy a Lamborghini and it gets processed through BitPay, that's a big flag for the IRS right there, and they're going to come and they're going to make sure that you had paid your taxes on the Bitcoins that you used to buy that Lamborghini with. And the Coinbase and IRS already took Coinbase to court, and the court upheld the request for basically a fishing expedition. And so Coinbase has turned over all types of these records to the IRS on people who bought Bitcoins and sold Bitcoins and stuff like that. So if you're not, at least try to make an effort to pay what you owe. And I think it's just a really bad idea to totally skirt, the tax laws and everything like that. I mean, does the IRS know about Dogecoin or, some of these other currencies? Could you, is it possible to make it, obviously keep the audit trail and all this stuff? Yeah, maybe, but is it really worth all the brain damage to do that? Not necessarily, in my opinion, but everybody makes their own judgment. But it is a very, it's a very serious issue. And then some people might even have moral issues, with paying taxes. They might think that they should pay taxes or that they shouldn't pay taxes. I mean, people are kind of divided on that in terms of their morality and their philosophy. And so at the end of the day, everybody just has to take their own, make their own decisions and put on their own big boy pants, and big girl pants.
Nobody wants to be the cryptocurrency Al Capone where the IRS is the only reason you got locked up.
Well, I think the IRS will be working probably with, the FBI and DEA, and they'll probably be focused more on the extremely egregious offenders, so people running darknet markets or securities fraud, dump and dump ICOs. I don't really see why it would be in the IRS's best interest to go and harass somebody who's at least attempted to pay a fair share of their crypto gains, because if they get in there and dig too much, they might actually find that the taxpayer is owed money back from the IRS because maybe they didn't take enough transaction fee expense because they just didn't calculate that right, or perhaps they didn't. There might be several things there. Maybe an exchange had lost some money and they didn't take a deduction for the loss of the property. If they lost Bitcoins on an exchange or something. So if somebody's at least made a good faith effort and tried to pay their taxes, it might just behoove the IRS to leave that person alone, because one, there's just not a lot of money to be gained going and looking in there, but two, they might actually find out that they would owe the taxpayer money back because the taxpayer hadn't adequately taken the deductions they were probably legally entitled to. Because all this stuff is very, it's all kind of very complicated and it's all very new and everybody's playing around with new technology. And so, yeah, is everybody going to be an absolutely 100% compliant on everything? I don't know. Probably not with some people. But, those who actually make an effort and try, I think that they might overlook some of these areas where they otherwise could have taken deductions and stuff, and so they might be overpaying their taxes. I know I probably overpay my taxes because it's just, is it really worth all this time to go calculate how much those transaction fees were on all these transactions, to save a few dollars here and there. So, I definitely think there are deductions there that people haven't taken. So, it's a complicated area and everybody just kind of has to do their best.
Yeah, we're talking about individuals. I feel bad for the businesses that accept cryptocurrencies outright and hold them as the cryptocurrency outright. That's really where I was headed with it being like a hurdle in Bitcoin mainstream adoption. Some businesses are turned off from the gate to even accept this currency because they don't have anybody to go to. But hopefully with mainstream companies hopping on the blockchain bandwagon, somebody like H&R Block would be H&R Blockchain or Turbo Blockchain or something will eventually come out of the woodwork.
Right. Yeah, that's I do think that you'd be surprised. There are actually some Fortune 50 companies that have been using Bitcoin for cross-border payments for several years now, and in order to increase the tax efficiency of their position and situation.
Yeah, I've actually seen recently freights with soybeans going from U.S. to China and from Russia to Turkey.
Yeah, so you've got some of that, but I'm aware of several other, ones. I can't talk about them publicly, but because the whole remittance business is very, very expensive and difficult. And also, there's with the CME futures, you can actually hedge out that exchange rate risk with the dollars, which can, make it a lot easier on the accountants at the CPAs at these big firms. And also, I don't know that it's a huge impediment for the businesses to, the tax side of stuff with Bitcoin, because they might just hold the Bitcoins and just not have tax recognition events also, that's what Overstock has been doing. So they accept the Bitcoin and it's very clear, whatever the fair market value of the Bitcoin is at the time you receive it, that's the number you'd use for your taxes. And so that would become the basis for like overstock. And then if overstock is just holding the Bitcoin, then they don't have any more there's no tax recognition event there.
So we talked a little bit about the present, we brought up the future. Let's bring up the past a little bit here. Are millennials likely to become gold bugs, or do you see this as the next generation being more likely to embrace cryptocurrencies over traditional storages of value like gold?
Well, I think that's, everybody's got a different form of human psychology. We've got ants and grasshoppers, from the Aesop's parable. And I think that we are seeing, with Bitcoin being sound money and a real way to save, we're seeing it begin to change individuals' behaviors and expectations. The last time we saw this was during the Great Depression, right? Everybody got very frugal and they saved and all this stuff. And we had the financial crisis, and people, millennials have had a hard time getting jobs and getting paid and all this stuff. And then they see Bitcoin, and it's like, They stop buying their avocado toast. They stop buying cigarettes. They stop buying beers and alcohol. They stop going out to nightclubs, and they buy Bitcoin and they hodl it. The ants among the millennials have been doing that, and they're now becoming very wealthy. So I do think that Bitcoin is causing it's causing and becoming a significant catalyst in changing a lot of human behavior in a very good way, in my opinion. People are giving up addictions and vices in order to hodl Bitcoin to be frugal and thrifty and save in sound money, something that's monetarily sovereign, that takes that power away from centralized entities. And so that capital is not being fractionally reserved, lent out, and all types of other stuff. So, this is going to be a very, very fascinating sociological phenomenon to just watch happen. And then you've got millennials that are, that maybe they're resistant, or they haven't researched it, or haven't taken the time and effort to buy it or anything like that. But at the end of the day, any millennial that is not rich right now, basically any millennial that's not a millionaire, it's their own fault, because they've had the option with Bitcoin. You know what I'm saying? And so anybody who's not a millionaire in 5 to 10 years, they will really have nobody to blame but themselves, in my opinion. And so this wealth transfer is the greatest wealth transfer that's ever happened in history, and it's just getting started, and it's going to be huge. Like, it's going to be a massive, it already is a massive wealth transfer, but Bitcoin is moving around like a black hole on the world's balance sheet, just sucking in huge amounts of capital, and it's just getting started. We're only in the first network effect, right? I mean, we're going to maybe see the second, third network effects combined with the sixth network effect kind of take off a little bit in 2018, but we're still in such early days. And so anybody who, hasn't honed in on Bitcoin's beacon, and if you've honed in and you've been very safe and conservative, meaning you've figured out how to properly store it and secure it, and you've just bought and hodled, you're doing very, very well. So financially. And I think that people who take that approach and strategy are going to continue to do very well. Sure, they might not be chasing every latest altcoin fad or whatever, but they're gonna do just fine.
Yeah, I'm a hodler. I try my best not to chase the ICOs, FOMO, and all that. Let's flip the script a little bit, though. We talked about the millennials and gold, but there are gold-backed cryptocurrency projects like Anthem Gold where they're bridging the gap between gold bugs and cryptocurrency enthusiasts. Is it possible gold bugs will embrace a gold-backed cryptocurrency? Can old dogs learn new investments?
That would be an interesting thing to see happen. So I've actually known Anthem Blanchard, who came up with this Anthem project. I've known him for over 10 years, and we're both gold bugs together, 10 plus years ago. the more I see and watch what's happening with Bitcoin, the more I think my thesis is playing out that the world is rethinking what money is, and it's either gold, which is limited in amount but not extensible. It's either dollars, which are not limited in amount but are extensible, or it's going to be Bitcoin, which is both limited in amount and extensible. So I'm not sure that gold is going to be able to compete with Bitcoin, because Bitcoin is extensible. We have segregated witness just got activated. That lays the foundation for Schnorr signatures. MAST, which is Merkleized abstract syntax trees. We're going to be able to do additional stuff in terms of side chains, cross blockchain atomic swaps, Lightning Network, Thunder Network. Within the cryptocurrency space, we can do stuff like Mimblewimble. It's like gold is the same thing it was 2,000 years ago. It is not extensible. Additionally, gold has a higher risk profile because it has to be centralized at one location in point in time, because it's a chemical. Well, it's an element, right? And it has atoms. Whereas Bitcoin, using math or scripts or these other things, it can exist in a lot of different places in a much more secure way, et cetera, et cetera. And so, and then the dollar, like anybody who thinks the dollar is going to be around with the same amount of purchasing power like 50 years from now, why in the world would you think that? Because, we have $20 trillion of debt. There's $200 trillion of contingent liabilities. Interest rates are starting to go up. What happens when you raise interest rates 1% on $20 trillion of debt? What happens to the budget deficit, right? And then you have to monetize. And so, since the dollar is not limited in amount, that's going to be rough. Not just for holders of dollars, but holders of dollar-denominated assets like the bond market. So Bitcoin coming on the scene and being extensible and censorship-resistant and immutable with, the blockchain, the processing, the computer processing power that is securing the proof of work behind the Bitcoin blockchain is something like 37 terawatt hours now annually. That's more power than the entire country of Argentina uses. Bitcoin is a behemoth. It is an absolute leviathan, and it's not going away. So, if it's not going to go away, then what's it going to go and become? What is its destiny? And that's why I've laid out the 7 network effects that we're seeing play out in kind of slow motion. So, that's the big, you've definitely asked a multi-trillion-dollar question there, and I hope I've given a good answer that, that's the question everybody is pondering. What, the world is rethinking what money is. And is it going to be dollars and euros and yen? Is it going to be gold, or is it going to be something like Bitcoin? And if it's going to be something crypto related, I just don't see anything else out there that would justify the trust, like the world reserve currency trust. Bitcoin's the only blockchain that has the liquidity, the security, and the scalability, and has proven it out in the wild for over 9 years. So, and these network effects, once they take root, they are near impossible to displace. So it's a very exciting time, and I think that's one of the reasons we see so much volatility in the price of Bitcoin, is because everybody is trying to perform economic calculation to answer those questions, and those people who calculate correctly economically, they will have profits, and those who calculate incorrectly will have losses. And so everybody can have an opinion, and the opinion is the only one that matters. It's where they're allocating their capital. Otherwise, nobody cares if you think you're calling Bitcoin a fraud, like Jamie Dimon. It's like, Jamie, your stock is down 90% measured in Bitcoin in 2017. Scoreboard.
All right, so since we know Bitcoin is here to stay, most likely, a lot of people do say 90% or more altcoins are likely to fail. That is due to lack of investor enthusiasm, lack of actual use case, or being used in real life. What are 3 alternative currencies or blockchain projects you believe could succeed, and what sets them apart from the thousands of projects?
Well, one, I don't know that these altcoins will necessarily fail. Most of them are built using the Bitcoin core software. They're just a fork and they've changed a couple variables, right? But that software is so resilient that even completely unattended, we're seeing some of these altcoins that continue to have significant value. For example, Bitcoin Dark, the last developer that was maintaining the project, finally came out publicly and said, look, I am completely leaving this project. It will be completely unattended. There will be no developers working on it. This Bitcoin Dark still does about $5 million a day of exchange volume, and it has a $375 million market cap. And it's completely abandoned. And it's a zombie. These blockchains are extremely difficult to kill. And if you've got 400 plus developers working on your blockchain on a regular basis, like Bitcoin does, it's only going to get better and better and more hardened. And so, and also some of my friends that, work on Bitcoin, on Bitcoin Core, they created a website, forkgen.tech. And basically, they've made it so that anybody can just go to that website and change a couple variables and hit submit, and it spits out the new software for a fork. So anybody can create unlimited amounts of these new forks now, super easily.
You want to fork Bitcoin with me?
What's that?
You want to fork Bitcoin with me?
No, I'm too busy to play around with all these things. But I raise it because, I think 2018 we're going to see tons and tons of these forks, and what we saw with Bcash and Bitcoin Gold and Bitcoin X and Bitcoin Faith
Bitcoin Diamond,
and Bitcoin Diamond and Bitcore and all this stuff. What I think is driving this behavior is that the miners, majority of them Chinese, they have commoditized inventory, right? They have commoditized hashes that come from their ASICs or come from their GPUs. And so they need to create asymmetric knowledge or information in the marketplace so that they get a competitive advantage. So there's a reason to stick a bunch of disinformation and misinformation and kick up a bunch of sand, because then they can take advantage of it if they've got superior knowledge about what's actually there. And exchanges, they just make money on the toll road, right? If you buy and sell, they make money there. So there's this virtuous network effect between, one, the speculators, and number 4, the miners or security, to have a whole bunch of these forks and everything, because both of them make more money doing stuff that way. And so I think we're going to see a lot more initial fork offerings and ICOs and other coins and stuff, because it helps the miners to be more profitable, and it helps exchanges to be more profitable. Now, will there actually be legitimate, real, fundamental technological innovation and stuff that happens in these forks and in these altcoins? No, probably not. They're probably gonna go and change a couple numbers, hit submit on forkgen.tech, go and get a fancy WordPress website, put a bunch of fake developers on there so it looks like a project, use some buzzwords, and then start trading it on an exchange, usually a lower tier exchange that needs to get more customers. And we're just going to see tons of this stuff in 2018. And the people who are buying it, I don't know why people would be buying these forks, because you can always buy them later, and okay, it's fine if you miss out on a little bit of gain if you stay in your safe, secure Bitcoin, right? So I don't necessarily think it'd be a good idea to be chasing the rabbit on all these tons of forks and altcoins that are going to be happening. But hey, they serve a very useful purpose to get Bitcoins out of weak hands, shaking the tree and move those Bitcoins to much stronger hands. And so, that'd be kind of word of warning there. But nevertheless, there might actually be some coins that have, significant gains on them. For example, I interviewed Evan Duffield. He was the lead developer of Dash. I interviewed him. Dash was $3. It's currently trading at like $800, and last time I checked, it was up in the last 2 years since I interviewed him. It was up 6x measured in Bitcoin. To find a project that actually significantly outperforms Bitcoin over a significant period of time, that's kind of a hard thing to do. Also, I did an interview last year, like middle of the year, and I was asked a question like this, very similar, and I kind of threw out PIVX, and it was 85 cents, and it ran to $12.50 and was up like 3x in terms of Bitcoin over a 4-month period. And they're working on some interesting stuff. They're the first zero coin implementation on a proof of stake coin, so that's kind of interesting. I mean, nothing that Bitcoin couldn't roll in if it proves successful on a fork like that. And then I guess another one that I found kind of interesting, some of my listeners on my podcast, they hit me up and they're like, hey, we've been working on this new coin and we'd like to give you some. And so I was like, oh, okay, like, send it over. I like to experiment with the coins and stuff, so they gifted me about $1,000 worth of this coin. I think it was in like October, and then like they had some upgrades to their wallet software and everything, and I didn't really play around with it all that much. And then I think in December I went and looked at the price, and the price was up like 150x.
Oh my God.
So all of a sudden, like, I have a lot more value there. And so I go and I try to get the new wallet software to work, and like the wallet.dat file is completely corrupted with the new software and all this stuff. So it's a complete disaster. And I actually had to like download the old version of the wallet software, manually extract each of the private keys, uninstall the old wallet software, reinstall the newest version, and then import the private keys directly, while like syncing their big blockchain, which also took forever to do. But I eventually got all the coins in a proper, safe way and everything like that. But it's because I had like this technological understanding and know-how with what's going on. So I think that's one of the things that is very good and useful about these altcoins, is it helps you develop technological literacy and fluency with how these things work. And all the better if you've got a 150x gain over a 4-month period that motivates you to go get it, right?
Yeah, you put your money in there and it motivates you to learn a little bit more. That's what I tell people. If they don't know what Bitcoin is, put $10 in it. That $10 will motivate you to learn enough. But you did bring up Dash, so that was a great segue to my question here. Dash has announced a partnership with a point of sales company that has like 4,000 plus partnerships with legal marijuana dispensaries. With dispensaries not able to open bank accounts, this looks like a match made in blockchain heaven. But do you believe regulations could prevent this type of innovation? Or is this the type of innovation that will force the hands of regulators?
Well, yeah, I mean, I know Danny Sessions, who like helped architect that deal with the marijuana dispensaries. I don't know. I personally just kind of stay out of the whole medical marijuana area because, I don't smoke marijuana and don't really care about all that too much. But it's not. I don't know if it's going to force the hand of regulators. But if the marijuana industry finds Dash to be useful for for their dispensaries and for storing capital in and stuff like that, I think that could be huge for the Dash network.
I could see the regulators themselves trying to use the currency so they could anonymously purchase legal recreational marijuana. As a politician, you don't want your Visa information getting out there. So I could see the rest saying, hey, this looks like a good idea.
But I think the dispensaries, they have to check your IDs and keep records of everybody who's bought and everything like that, So, I mean, I don't know. But if you look at, so we had Dash, we had PivX, and then the one with the 150x gain was Smart Cash, because I don't think I mentioned the name of it. And so, there might be opportunities with little altcoins here and there. But at the end of the day, why wouldn't these marijuana dispensaries use Lightning Network hubs on Bitcoin, which have onion routing?
We're just waiting for Bitcoin to have confidential transactions.
Well, with Lightning Network and onion routing, that alone is going to provide a degree of fungibility and anonymity, and then you throw in additional stuff like mass and confidential transactions and Mimblewimble, if Mimblewimble ever actually got rolled into Bitcoin. And so, I mean, yeah, it might be good in the short term, with this Dash and the marijuana groups, but I think everybody might really, they might really want to come back to the core with Bitcoin because it's got the network effects. So yeah, this is a good little growth of network effects for the Dash network, but I don't think it's going to overcome these 7 network effects that are all taking root with Bitcoin.
Gotcha. We went over a lot here with, Bitcoin, altcoins, precious metals. Should Bitcoiners diversify back into stocks and precious metals, or are we already on that next level and shouldn't look back to such things?
Well, the really safe conservative advice is don't put any money into Bitcoin or keep any money in it that you can't afford to lose. It's still kind of an experiment, and we're learning and growing with it. But hey, Bitcoin's about monetary sovereignty, and an essential aspect of that is that you have to take personal responsibility for your own choices. And so, I think everybody should make that decision based on their own subjective valuation and their own economic calculation of how they see the world and all of that stuff.
Couldn't agree more. I mean, me personally, I'm all in on crypto. I don't even have dollars until I need to interact with services and goods. But I have been looking to re-diversify. That's why I asked, back into things that are a little safer, considering this pullback in January. But it looks like this happens every year for 5-6 years recurring. Do you see the same pattern happening where we have that rally that follows the January dip, or is this year a little bit different because of the CME futures, ETFs, options, and all the things coming our way?
Well, I mean, the CME futures are tiny amount of volume compared to the volume of the Bitcoin markets. But hey, it got pretty overstretched. That MAYER multiple got to 3.7x in December. This is a very healthy correction, consolidation, and that 200-day moving average is up to about $7,700 now. That's the highest it has ever been, and that's the long-term trend. It's filtering out all the daily noise. So, Bitcoin, the fundamentals have never looked better. The 200-day moving average has never looked better, and that MAYER multiple is actually getting pretty attractive at 1.3x right now. So, you want to buy it when it's undervalued, and you want to exchange when it gets overvalued. That's, if you're going to play the trading game on it.
Now let's talk about the actual utility here. We have the Lightning Network is being used today. Somebody previously, the other day, using TorGuard, used the Lightning Network on the Bitcoin blockchain to pay for a VPN router. Are things like SegWit and Lightning Network, is this enough to scale to Visa-like transactions, or are we still years away from that?
Oh no, when this Lightning Network, which is already live on mainnet, by the way.
Yeah, with Torguard. I saw that the other day.
When we worked the bugs out and everything, I mean, we already got people testing it with real money, right? Like they're trying to find the bugs, and the Lightning Network developers are like, they're like, oh, it's not necessarily safe and everything. And it's like, no, you don't understand. Bitcoiners want to be at the forefront of the innovation. We want to open the Lightning nodes, and we want to try to buy like the sticker that says my other node is a satellite. And like, I mean, we want to have fun in this area. You know what I'm saying? Like, we want to experiment with the latest and coolest tech. And we're willing to risk our money to do that. And there's like 3.7 Bitcoins in Lightning Network channels on mainnet right now. That's almost $50,000. So people are putting their money where their mouth is. They're experimenting with Lightning Network. They're trying to find the bugs and help the developers. So this layer of the internet, because this is a new layer of the internet, it's going to be evolving at a much faster pace because the users have such an economic incentive to help the development process.
I couldn't agree with you more, man. That was great. Yeah, I definitely got to get that sticker now. What is to wrap things up here, what is your prediction on the price of Bitcoin, Ethereum, and Litecoin for the year's end?
Oh gosh, I'd have to go crunch some of the numbers, but I do think we'll see Bitcoin probably between like 15 and 45,000 if I were to give it a range, of what's more probable than not. And Ethereum and Litecoin, I just don't follow those markets close enough to even give any type of an educated guess. I'd just be pulling a number out of thin air, and I usually try not to do that.
So what is one thing somebody new into Bitcoin should know? The one thing they should know before they put money into Bitcoin as an investment?
Well, if you're like, the ethos behind Bitcoin is to claim your monetary sovereignty. So, that means personal responsibility, and you need to figure out how to run a full node and hold your own private keys, because otherwise you're going to be relying on someone else, and you're ceding to that other person part of your monetary sovereignty. And so it's just not really in the ethos of Bitcoin to do that. Or, if you're going to do that, you very well might just lose your Bitcoin. So, because look at how many services have been hacked and have lost money and have stolen it, and et cetera, et cetera. So, you have to really take this seriously, Yeah,
definitely. Recommend everybody have access to their private keys. Couldn't stress that more.
Well. Run a full node and have access to your private keys. And I talk a ton about this on my Bitcoin Knowledge podcast, bitcoin.kn, and give people a lot of helpful advice and tips. And I've interviewed over 200 of the CEOs, and I've tried to make those interviews so that they're not timely, they're very evergreen. So, I'd recommend go back and listen through a bunch of those old podcast episodes to kind of see what everybody's working on in the space, because this stuff doesn't just get built in a day, so some of these CEOs, what we talked about a year and a half ago, it's still relevant today. And so it's good to learn all that stuff.
All right, guys, make sure you check out the Bitcoin Knowledge podcast. Thank you, Trace Mayer, for joining us here on Pure Blockchain Wealth, where we talk about putting your wealth on the blockchain. Have a day.
Yep, thanks so much for having me, Ken. Keep up the good work.
Cryptocurrency News Channel. Your new future. Thank you. Follow us on YouTube.